today the Dow is seeing a pretty big surge. It's up roughly 2.5 percentage points. The Dow jump happening after Bloomberg reported that Treasury Secretary Scott Bessent told investors behind closed doors that he expects the United States trade war with China to de-escalate. Joining us now is Nick Timiraos. He's a national economics correspondent at the Wall Street Journal. Nick, thanks so much for being with us. I have to ask you about those comments from the Treasury Secretary. Do you have any idea on what they're founded on? Because our reporting indicates that the administration reached out to Beijing and said that President Xi should request a call with Trump. Our understanding is that call has not yet come.
Well, and Bessent didn't say that the U.S. is talking to China. He simply, according to what's been reported, repeated comments he made publicly last week. These tariffs on China are so high that they are a tax that's not going to be paid. They're going to destroy demand, and we can't maintain it for that long. So I think that's what you see markets reacting to right now.
I have to ask you about the Dow being headed, despite today's historic gains, for the worst April since the Great Depression. I mean, there's a lot of factors here. There's China. There are pending deals with essentially almost every nation on earth. And then there's Trump's attacks on Fed Chair Jerome Powell. Which do you see as weighing most heavily on Wall Street right now?
Well, I think it starts and ends with the trade war. And the reason for that is if you go back to the April 2nd Liberation Day announcements, the optimism on Wall Street was that everybody was going to know now what the rules of the road were going to be for trade. If you're a business, you are not going to put in a multi-billion-dollar investment in the United States if you don't know what your cost of goods are going to be. And we still don't have that clarity. So the tariffs on China, today we have the Treasury Secretary saying they'll come down. We still have this 90-day pause on the other tariffs with 60 other countries. People don't know what the future is going to look like, and so that freezes up activity.
Some of that uncertainty leads to gold being at an all-time high and the dollar weakening as well. Do you think the Treasury Secretary, the Commerce Secretary are seeing those as red flags and advising the president that some kind of off-ramp is needed?
They have to be concerned here. If you go back and look at what Secretary Bessent said a couple of months ago, he said the administration was not going to talk about the Fed. They were going to focus on the 10-year Treasury yield. And that's important because your mortgage rate, your auto loan rate, it depends on those longer-term interest rates. But if you look at the 10-year Treasury rate, it is up over the past few weeks. So that measure of success is going in the wrong way for the administration. And I think it has to concern senior economic policymakers.
You wrote in the Journal that Trump is essentially laying the ground to blame Fed Chair Jerome Powell for any kind of economic weakening. What happens if Powell gets fired? And what happens if he says, all right, let's lower interest rates? Would that solve some of this problem?
Lowering interest rates here isn't going to deal with not knowing what your cost of goods are going to be, having to pay a large tariff on a freight container that's getting off the boat in Long Beach, California. So it's not clear what lower interest rates do here. If the president were to try to sack the Fed chair, I think you'd see a huge legal fight, and the market would have a verdict probably before the Supreme Court could get together. And you've been seeing that in the markets in the last couple of days, Boris.
We've seen major announcements from a number of U.S. companies talking about either temporarily or possibly permanently installing layoffs and laying people off. I wonder how you think the tariffs are impacting the jobs market.
Well, you don't see a lot of layoff announcements yet. Today you had the CEO of Verizon saying, we are going to pass these costs on to consumers. And so I think that's the big question right now is which do you see first? Do you see prices go up, or do you see companies say, you know what, we're going to have to let people go because this is eating into our margins, this is going to hit our bottom line?
Nick Timiraos of the Wall Street Journal, thank you so much for sharing your perspective with us. Appreciate it.
Today there is a rebound on Wall Street. The markets are up nearly 1,000 points, recovering somewhat after another brutal sell-off to start the week. But it is not all good news for the economy. This morning, another flashing red warning light. The International Monetary Fund threw out its global economic predictions from before President Trump launched his global trade war. The new forecast: a slowing global economy and worldwide trouble with inflation, all because of the president's tariffs. And investors are obviously spooked. The bond market is down and the dollar is doing worse than it has in years. Look at this Wall Street Journal headline. It put the stock market's recent drop in context. The Dow headed for worst April since 1932 as investors send no confidence signal. My smart reporters are back. Leanne,
Yeah.
I mean, it's hard to, I mean, yes, it's very good news that the stock market is back up, but one day does not a recovery make, and all of these other warning signs are very serious.
Yeah, and part of the challenge and maybe the problem is that I'm hearing from sources is all of this was self-inflicted as well. And that is what is so frustrating to members of Congress, to people, to Wall Street, that this didn't have to happen this way. You know, Trump ran on the economy. He's barely talking about the economy now because it's obviously a weakness for him. He's talking instead about deportation and immigration and suing or taking colleges' funding away. And so it's a distraction to take away what is really happening to people's pocketbooks and people's expenses.
But President Biden learned very well before that you can talk about other things, you can focus on other things, but if people feel the way they feel, that is a reality that can't be changed. You and your colleagues at the National Review wrote something that I want to read to our viewers, an editorial this morning, and what you write is, it's called Trump's War on the Fed, which is very much related to the trade war. Maybe you think Trump's trade policy has merit, or the Federal Reserve needs to be brought more firmly under the president's control. That's a separate question from how real investors with real money in the real world are really reacting to Trump's decisions. Their verdict is clear. They don't like it.
That's right. I don't think that investors really around the world are looking at the conduct of U.S. trade policy and how chaotic and volatile it's been and saying we need more of that for U.S. monetary policy too. But obviously Trump wants to bring everything within his orbit, and he wants to be able to control everything with his whim. Markets don't like that. Markets want predictability, they want certainty, and that's the one thing that he is least eager to provide.
Yeah, and of course, what you reference here with the Federal Reserve is the idea that a big part of why there was such a big market sell-off yesterday is because the president woke up and sent off a social media post that was really, really scathing against the Federal Reserve chair, who is supposed to be independent.
Right. It's supposed to be an independent institution, but it seems like with the economic frustration that is forecast at this point, that the president is sort of setting the groundwork to blame the Fed, you know, as people are frustrated if consumer prices go up. And we've seen that in the past as well, him saying, well, look, can you bring interest? This would be a good time to bring interest rates down. Well, we also know that that's a factor in rising inflation as well. So that interest rates are a tool to keep inflation down as well. So this is part of the playbook of the president when facing criticism on a specific issue, including something as crucial to his electoral win, as you noted, like the economy, finding someone to blame.
Yeah.
It seems like we know who that person is going to be here.
Except that Jerome Powell wasn't elected.
Sure.
He was appointed, by the way, by Donald Trump in the first term. And President Trump now says, well, I think it was really immigration that got me elected. If you look at every exit poll, it was the economy, that drove it. And look where he is right now, Leanne. This is a question from a CNBC poll that came out a couple of days ago. On the economy, his disapproval is 55%. He's pretty underwater there. Inflation, very underwater, 60% disapproval. And then federal government spending is a little bit more even, but he still has a majority of people not happy. I will say that he's above water on the issue of immigration, which is probably why he continues to talk about that, which is exactly the point you were making.
Yeah, absolutely. And that is, I mean, the fact that he's so underwater in the economy, like that might be the worst poll we've seen. I mean, I haven't gone back and looked.
Let's bring it back up if we can.
But I have not seen a poll that bad where he's so underwater on the economy. That's an issue that he was always either equal or winning, that people did approve of him. And, you know, when you have Republican senators like Senator Kennedy going on TV and saying that this is absolutely Trump's economy now, that is bad news for Donald Trump.
And he set really high expectations to move fast on this as well, to bring consumer prices down on day one, too. When you see polling like this, that cuts right through that argument.
And there's something so perverse about his campaign for lower interest rates. First of all, it might not even be in his own best interest if it means you get higher inflation. We've seen how inflation is deadly for incumbent politicians. But second, he's making it harder for Powell to cut interest rates, even if Powell decided in a month we really need an interest rate cut. If he does it at that point, it'll look like he is giving in to Trump, and Fed chairs are very, very concerned about maintaining their credibility.
Yeah, that's such a good point.